The reason we're still seeing inflows is most ETF investors still have 0% Bitcoin exposure. And in 3 years, most ETF investors will have 1 to 5% of their portfolio in Bitcoin. And so people were worried, if the price goes down, will people be paper hands? Will they sell out of these Bitcoin ETFs? I didn't have any of those concerns at all. We're still so early in this journey. I expect the second half of the year to be very strong for inflows. I expect 2025 inflows to exceed 2024 inflows by a significant number. The core message on Bitcoin ETFs is we're still very early. This is going to be multi-years. I put out a number that said $15 billion of net flows within the first 18 months. And I think that's what we'll see.
Matt Hougan begins by emphasizing that we are still in the early stages of Bitcoin ETF. Despite the inflows we've seen so far, most ETF investors currently have 0% exposure to Bitcoin. Hougan predicts that within 3 years, the average ETF investor will have between 1% to 5% of their portfolio allocated to Bitcoin. This anticipated shift represents a tidal wave of inflows that are bound to happen as the market matures. One of the key points Hougan addresses is the concern about investor behavior in response to price fluctuations. He remains unconcerned about the potential for paper hands investors who might sell off their holdings at the first sign of price drops. According to Hougan, we're still at such an early stage that these ETFs haven't even been unlocked for major wealth platforms like Morgan Stanley and Wells Fargo. This indicates that there's a significant untapped market waiting to participate. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Well, I think vis-a-vis the Bitcoin ETFs, I think we're still in inning one. That's the thing that observers who are new to the ETF space, I think, misunderstood as we entered this phase. The reason we're still seeing inflows is most ETF investors still have 0% Bitcoin exposure. And in 3 years, most ETF investors will have 1 to 5% of their portfolio in Bitcoin. And so we're on this sort of tidal wave of inflows that, in my view, has to happen. And so people were worried, if the price goes down, will people be paper hands? Will they sell out of these Bitcoin ETFs? I didn't have any of those concerns at all. We're still so early in this journey. We haven't even unlocked major wealth platforms like Morgan Stanley and Wells Fargo. They can't even buy these ETFs in a meaningful way. I expect the second half of the year to be very strong for inflows. I expect 2025 inflows to exceed 2024 inflows by a significant number. The core message on Bitcoin ETFs is we're still very early. This is going to be multi-years of billions of dollars of flows before we reach some sort of steady state. And that's why we continue to see inflows despite the lack of news catalysts and despite the sort of sideways chopping of price. Yeah, it's a hurry up and wait scenario. I mean, I do think it's important for the community to remember that 2 months ago, no one thought we were getting spot Ethereum ETFs. Now people are frustrated that we didn't get them last week. We didn't get them this week. It looks like we're moving in the direction of having these sooner rather than later. And actually, from a traditional SEC ETF perspective, this process is moving extremely quickly, right? Lawyers and regulators don't tend to turn things around in a matter of a few weeks or a few days. We're still seeing that on these Ethereum ETFs. So I would feel comfortable with the pace of progress. Of course, we don't know when or if they will launch, but I think we are getting closer and closer to that every day. And I think, to your point, I really don't think these ETFs will cannibalize what we've seen in Bitcoin. And I'll point to a conversation I had with the CEO of an advisory platform that manages over $100 billion of assets. And what he told me was he was uncomfortable letting his advisors who work for them allocate just to Bitcoin because he'd been trained in the world of indexing and diversification. He was really excited for the potential of getting a spot Ethereum ETFs, because then his team could invest in both Bitcoin and Ethereum, have a diversified position in crypto, and he felt much more comfortable about that. So I think this is actually an accelerant even to Bitcoin ETF flows, which I know is counterintuitive. If you think professional investors want to move into this space, and that's a source of major inflows, I think they're going to be happier having two assets than they were having one. So I see it again as additive. Yeah, I would think of it in two phases. So the first phase is straight out of the gate. And the reality is we don't know what flows will look like in the first days or weeks or even first month of these ETFs. You have to remember that there is the Grayscale Ethereum Trust ETH with $10 billion of assets, give or take, some of which is not long-term oriented toward ETH. They were investing in that because it was trading at a discount, and they assumed the discount would go to zero when it converted to an ETF, which it would if these ETFs launch. And there's a risk that that money comes out of the market rapidly. So there's a possibility, I don't think it's a probability, but there's a possibility that within the first days or weeks, we see days of inflows and outflows. That said, if you pan out to 3 months, 6 months, 12 months, 18 months, every piece of data around the world suggests that these are going to gain significant assets. If you look in Europe, where they're Bitcoin and Ethereum ETFs, guess what? They're both successful. If you look in Canada, where they're Bitcoin and Ethereum ETFs, guess what? They're both successful. If you look on Coinbase, where people can buy Bitcoin and Ethereum, guess what? They buy both. Every place that investors have the choice to buy both of these assets, that is what they'll do. I put out a number that said $15 billion of net flows within the first 18 months. And I think that's what we'll see. That's, less than we'll see out of Bitcoin ETFs over the first 18 months. But then again, Ethereum is much smaller. So to sum up, the first few weeks or months, don't be surprised if it's confusing, if there are inflows and outflows. But over the next 6, 12, 18 months, these things are going to be very successful. They're going to push Ethereum's price significantly higher, and they're going to be popular with investors. I feel pretty confident saying that. Yeah, I do think there's risk in that. One of the things we're working through as an industry is you have all this locked up crypto, whether it's Grayscale Trusts or it's Mt. Gox or it's the German government that's being unlocked and unleashed into the market. That's why I said that over the first few days and weeks, there's some degree of risk. But what we saw in Bitcoin is there were more than enough new investors to swallow all the assets coming out of GBTC and add on top of that. And I think that's what we'll see in ETH. I only use this caution because I don't want people to get, overly excited or overly worried if the first few days post-launch, assuming there is a launch, are a little bit funky. That's what you should expect. Keep your eyes on the long-term prize, and I think we'll overcome whatever the outflows out of Grayscale are, and then add significant assets on that.
He also highlights the risk of initial volatility due to the release of locked-up crypto assets from various trusts and governmental holdings. However, Hougan remains confident that the market has enough new investors to absorb these assets and continue growing. Hougan notes that Ethereum's net issuance is roughly zero, thanks to the burn mechanism, compared to Bitcoin's inflation rate of around 2%. This tighter supply situation for Ethereum could lead to a more significant price impact from inflows.
Liquidity, black holes that may come unstuck, which is a very real effect in Bitcoin and is contributing to the sideways price movement we're seeing this summer. But generally speaking, the supply situation in Ethereum is tighter than it is in Bitcoin in terms of net new issuance, right? ETH issuance depends over what period you look, but is roughly zero once you account for the burn. It's been up a little bit recently. It was strongly negative, net burn before that, but roughly zero. Whereas with Bitcoin, you were dealing with, 2%-ish inflation. And so I do think there's a different supply dynamic on ETH. And as you mentioned, you also have all these staked assets and all these assets that are tied up in DeFi protocols. And all of that is not liquid and locked away from the market. So there is a world where the same amount of inflows has an outsized effect on Ethereum's price. I certainly think that's possible just because the supply situation is tighter at this given moment for Ethereum than it is for Bitcoin on a short-term basis. I think that's a real thing to keep in mind. The first thing I would say is I think we've driven a dagger through the heart of this private permissioned blockchain story. I think the fact that BlackRock launched its tokenized money market fund on Ethereum, obviously in a permissioned sense, but still on a public blockchain, is a signal that that's the direction of travel for Wall Street. And that's become a very successful fund, gathered $500 million of assets. Every other major Wall Street firm is going to look at that and realize that the graveyard of private permission blockchain projects from the last 5 years is massive. And on the other side, Wall Street moving into the public blockchain space and building on that has a very signal success. So I think that's the direction of travel. I'm not much worried about that. I think you do raise an interesting idea of we've seen this sort of fracturing of transaction zone activity on layer twos, on different data aggregation layers. We've seen ETH becoming less central, but as you mentioned, it all boils back down to ETH in the end. I think what an investor would do if he were or she were thinking about this space, what it tells you to do is that owning ETH is not probably sufficient to really capture the space. You should probably own ETH. You should own Solana. You should own some layer twos. You should own Coinbase because it's tied to the success of Base. You should think about new chains. You should be looking at Monad. You should be thinking about Mega ETH. You'd want to build a diversified portfolio of all those assets if you were trying to capture the growth of this space. But professional investors probably don't have that luxury. They need an ETF. ETH is what it is. That will give you a beta to this space. If this space is hugely successful, I feel very confident that ETH will be successful as well. That's maybe 100,000 foot level analysis, but I think for the next few years, that will probably be good enough. And then really sophisticated investors can build that basket with these other assets that capture the fullness of the opportunity set.
A particularly compelling point Hougan makes is the success of BlackRock's tokenized money market fund on Ethereum, which indicates a broader acceptance of public blockchains over private, permissioned ones. This success could pave the way for more Wall Street firms to move into the public blockchain space. Hougan concludes by advising investors to diversify within the crypto space. While owning Ethereum is a good start, he suggests also considering investments in Solana, Layer 2s, and other new chains to capture the full potential of the market. Professional investors, who might not have the luxury of diversifying as extensively, can rely on ETF to gain exposure to the overall growth of the space. Please like and subscribe my channel.